You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
It has been reported that millennials are not only the largest generation in U.S. history, but that they will also receive the greatest transfer of inherited wealth ever. What do we know about this group and how do we reach them? Well, with us today is Ian Rosen, CEO and president of StockTwits, and his panel will try to help us understand this generation and their thoughts and ideas regarding finance and investing. Please welcome Ian Rosen and our panel.
We're going to talk about millennials. So let's start by introducing the panel. My name is Ian Rosen. I'm CEO of StockTwits. I'll go last.
Hi, my name is Mary Ryan, and I am with TD Ameritrade. I run the university program at TD Ameritrade. So my job solely is to work with the younger generation of millennials, and I am also a millennial myself.
My name is Tony Zhang. I run the product strategy team at OptionsPlay. We're a company that helps people visualize options so they can better understand how they can analyze and explore options. And I myself, as a millennial, is why I'm on this panel.
I am not a millennial. I'm Kristi Ross, co-CEO and president of tastytrade. tastytrade's an online financial network, and we produce 8 hours of live programming every day, talking about the financial markets, focusing on derivatives, options, and futures. We have 40 different shows, and millennials all the way to retirees, we cover, as well as beginners all the way to advanced. And then we have a brokerage firm that we just launched, a 100% owned subsidiary, Tastyworks. So happy to be here.
So I am also not a millennial, but StockTwits is the largest independent social platform for investors and traders. We do about 150,000 messages a day. We have over 1 million registered users, and half of them at this point, and this is growing pretty rapidly, are millennials. So as Bill said, and millennials is a funny topic, I find, because half the people that you talk to about millennials are terrified of this large generation that's coming and what to do about it, and half the people are saying things like, I don't care, we do our thing. But as Bill said, largest generation, $30 trillion transfer of wealth from boomers to them and Gen X, which is a much smaller generation, and these people engage with products in a much different way, and they don't necessarily trust financial institutions in the same way. So I think my first question for the panel is, given that this is an incredibly important demographic, and given that they have proven that they engage with products and with financial services in very, very different ways than their parents or grandparents, are there ways that in your own organizations you have found that their habits are different, that you've been able to engage successfully with them, what works, what doesn't work, and obviously we want to try to make things actionable for everybody?
Sure.
Why don't you go first?
So as I mentioned, I work a lot with college students, which is the younger end of the millennial generation, and communicating with them has been very interesting. They do not read emails, so trying to reach them through email communication, we've now resorted to a lot of text messaging, a lot of social, have really increased our social presence. Another thing that we found is they procrastinate, especially at the college age level. So we've had to learn to be very patient with them. Try not to pressure them too much to do something. We've learned they're eventually going to do it. If any of you, have college students of your own, I'm sure you experience this, but something we've definitely had to learn how to be patient.
Okay, Tony?
From my experience, I've found that millennials, as myself am one, we tend to have a shorter attention span. And that actually comes from the fact that we are actually quite good at navigating what we consider as complex navigation systems. And whenever a navigation system is broken from our perspective, we lose interest very quickly. And that is part of why we have a very short attention span when the experience is broken. And that's why one of the things that we focus on most at OptionsPlay is really simplifying the experience and making sure that it's as smooth as possible for capturing that millennial market to get them to be interested in looking at your product and your services.
Do you find that that characteristic makes the millennial audience more DIY or more prone to easy to use experiences, or a combination?
I would say both. In terms of DIY, millennials are great at exploring and figuring out how to do something, especially with the power of Google. Everything we want to learn is there. There are YouTube videos on how to trade options. Tastyworks has done a lot of work in terms of videos, in terms of helping people learn how to trade options. So we spend a lot of time figuring out how to do things ourselves as opposed to relying on learning from other people.
Right. Kristi?
Yeah, boy, I could talk for the whole panel here.
I should stop and say that in our pre-call for this panel, we could have debated for 45 minutes on that call, so there's a lot to say.
So one of the things I want to talk about first is remember that millennials are the first generation of digital natives, right? And so they actually are shaping the way we shop. They're shaping the way we consume media, and they also expect instant access. To your point, instant access where they can actually get information. They have instant access to pricing and to products and to education and information, and they want instant access to peer reviews. All of those things matter. And when you think about it, where do you see peer reviews and where do you get, the feedback is in your social networks. So they have a huge trust of their social networks. So if you have a financial institution that's not present on social media, you're sort of missing that opportunity to connect with and be validated as a brand by millennials. And so if you are there and you're in social media and you're doing a hardcore sell, that actually will work exponentially against you because they essentially shut you out. So it's something that, just like building your own networks on a personal basis, the more you ask from people, they sort of back off a little bit. But if you're constantly giving them something, if you're giving them nuggets of information, pieces of information that they can use, that they can learn from, or making introductions, right, like in your own networks, there's a lot of positives that come out, and they're going to talk about it, and it's going to sort of be amplified within their social network. So social media absolutely positively is where you need to be because that's where they are. And I could talk about video forever, but I'll wait till one of your next questions.
But it's an interesting point because I think using social as both an acquisition channel and an engagement channel, I mean, these are disciplines that are inherently, they're not at odds with our businesses, but they're certainly not necessarily core, at least weren't 10 years ago. So how have you found, because I think the user-generated content question is a huge one, right? I mean, and I personally have a huge stake. Everyone on this panel is somehow a partner of ours. So how do you build out that capability in a way that you can control it, that you can keep it healthy and happy, still grow it, and not be in the social media business yourself, I guess?
Well, I think you have to have a social media department. You have to, for it to be taken seriously, you have to engage. There's a constant engagement with it. And so you do have to have a social media department. You actually, having everyone, not everyone, but a lot of people throughout the firm actually partake in that and be part of it. You have to have a social media policy. You have to give them guidelines, particularly in the regulated industry. But it's where you start. Probably the biggest plus for us is when you look at the social media rankings, Number one is Google.
Yeah.
I mean, in the US, in Canada, in the UK, number one, their properties. That includes YouTube. That you have 81% of millennials that in the US that watch YouTube. So you know they're there. And 2/3 of them believe they can find anything they want to learn how to do on YouTube, right? So doing videos that are consumable because they like it brief and they need it to be entertaining and educational. Yeah. I mean, all of those aspects, and it has to be a little bit personal. It has to actually speak to them, which is important.
You're right. Video is a huge thing to talk about, and we'll come to it in the next question. You're right. But Mary, can you talk a little bit about how TDA uses social? Because I know that you guys are also.
Yeah, we're actually very social from a few different perspectives. But the one thing that we found with millennials is we have not only a social media team for engagement, but we have a social media response team for that conversation. And being a millennial, as you're saying, instant gratification. I mean, I grew up with Uber, I grew up with my Netflix. Anything I want, it's on demand, and I'm used to that. So if I'm calling into a brokerage or anything and I want support, airlines, I go straight to Twitter because I know that's how I'm going to get a response if I need support. So that's one of the things that we've really done, and we feel that younger generation really connects with us. Whether email or call, they know that we're standing by on social media to help them out with anything.
Right. Yeah, that is really important. And it actually kind of segues into, I think it's almost kind of like the money question, right? So a lot of financial services institutions, especially some that have been getting a tremendous amount of investment and attention, have gone out of their way to, and Betterment comes to mind here for me, which is to take I think what is a little bit of an old or not necessarily brand new product and repackage it in a way that is just experientially exactly right for this particular generation. What are things that your organizations either do or want to do or we think we can do? Because options, frankly, are a complicated product. And they're a product that in the grand scheme of things, if somebody is an underinvested person, and millennials are underinvested, options is something that's going to feel very intimidating. Are there things that we can do as an industry, or things that you do in your organization that work to repackage and bring what would potentially be considered a complicated product to this generation that, granted, is DIY, but really wants to have that like instant gratification experience?
Yeah.
Actually, Tony, why don't you start this time?
Yeah, so from that perspective, I think we actually should look at some other industries that have successfully captured the millennial market. If you look at companies like Snapchat or Tinder or Venmo that have successfully captured the millennial market, it's what they've really successfully been able to do is simplify the user experience. So what they've been able to do is take what the outcome that the user is trying to accomplish and condense it down to the absolute simplest number of steps to achieve that. And that's something that we can learn for options trading, because as you said, options trading is relatively complex. But if you look at how options user experience currently is, we bring up the option chain, right? That's where everyone starts when they're trying to trade options. And the option chain lists every single option you can trade by expiration and strike price. That's almost like giving someone a phone book and saying, hey, everything you need to know or figure out in terms of trading options is in this book. Just go ahead and figure it out. It's not a great user experience. We no longer use phone books to look up phone numbers. So what we do is we search for it, right? So we can do the same thing with options. Instead of saying, here's all the options listed, go ahead and figure it out yourself, we can do some simple things like asking people, what is it that you're looking for before we display anything to you? And that's really some of the work that we do here at OptionsPlay is before we show you anything related to options, we first ask, what is it that you're looking for? Are you bullish on a stock? Are you bearish? Are you perhaps looking for income strategies? And then what we do is we tailor a set of strategies for that user that makes sense based on what they're looking for. So that's some of the things that we can start thinking about is going through the flow of the steps that a trader takes to go from an idea to a trade and seeing how we can simplify those steps that makes it easier for someone to, number one, start looking at an option. So for example, if you throw someone on a chains page, it's just a wall of numbers. It doesn't mean a lot to people. So if you can change that experience where you can show someone, visualization is also an extremely useful technique in helping understand options, and that's something that we do here at Options, is display those strategies visually and give you all the relevant stats so that you can say, hey, here's a strategy that I can use to generate some income on my portfolio. I may not understand it fully, but at least I have some ideas as to what I'm looking for, and I can start researching further down the line.
What level of experience do people, because I mean, you really do cater to, like, I think is your tagline something like options for the rest of us?
Yeah, options for the rest of us.
So what level of experience and what type of experience do people come to you with?
So I would say almost half of the people that come to to OptionsPlay have no options experience prior to coming to us. And they actually use our tool to help them get started. It doesn't mean that that's the only tool that they'll use. They'll likely still have to use education. So the OIC is a great content provider that we usually send our users to when they need to find out more in depth about option pricing, the Greeks. That's something that we leverage the OIC's content a lot for. But our goal is to just get someone started and get an idea started, saying, hey, this is a product that maybe I can incorporate into my portfolio by changing the experience of how they view their first option.
I'm just going to pick on this a little bit more. So they don't have options experience. Are they experienced investors? And I'm trying to sort of tease this out because I think that younger people as a group are underinvested in general.
Absolutely. So I would say most of the users that come to OptionsPlay have some equity experience. So most of these users are either currently trading stocks or investing in stocks, and they're coming to OptionsPlay for two reasons. One, as an alternative to buying stock because they want to look at buying calls and puts. But I think the majority of those equity investors that are coming to OptionsPlay, they're actually coming to us to look for income ideas. So cover calls, short puts. These are the type of strategies that we're seeing a lot of millennials look at for their portfolios.
Kristi?
Yeah, so we, very similar to what you're talking about, is we clear the noise. We get rid of all the noise, and we actually teach a logical, mechanical approach to investing, because there is way too much information for those customers to try to absorb and actually make an easy decision. So we say only stay in, liquid underlyings, only sell, because a lot of times what we teach is about selling to open. So we're premium sellers. And so we're teaching them, look for high IVR, right, and above 50. So we don't tell them what to do, but we do give them specific parameters that really help them in the end. Staying in liquid underlyings, basically trying to get the most premium out of it, and also visually. Taking those complex concepts and visually displaying that it's like a picture's worth 1,000 words. Really, truly, it helps people grasp the concept. Whether it's a millennial or whether it's a baby boomer, it doesn't matter. That applies to everybody. The one thing that we did, we produce an immense amount of content. And like I mentioned, we have like 40 different shows. And we have a series that we do that's called Where Do I Start? And it really, truly takes someone who's a millennial and working with a veteran trader and walking through the true transparency. Like, they are not allowed to do any trading prior to this show. And they're required to just ask the questions that are on their mind. And that has also helped us develop an amazing pre-produced series that walks through all those aha moments, all those gotchas, all those little aspects that we as veteran traders don't think about every day. And so that, I think, is really important. Education's really important. And I'll just talk about this a little bit, but when you look at the millennial generation, they want guided independence. They want to do the research. They have there was recently a BlackRock survey that came out in January, and when you compare the different generations about planning to trade, right, there were 70% of the millennial respondents that said they're planning to trade. And then when, in comparison, that was significantly higher than all the other generations. And then the ones that said actually took the steps to research it, it was like 45% for millennials. All the other ones were like in their 20s and 30s. So they are, they're action-oriented. And again, this goes back to the instant access of information. They want to dive in and learn this stuff. It's as long as you have that educational material and information, but don't inundate it. Don't have it be everything. You've got to simplify it and break it down into steps, just like learning anything. And Mary, I'm sure you see that too when you're dealing with some of the college students.
Yeah, actually, go ahead, Mary.
Yeah, I mean, what we do is similar to the same thing, right, as far as putting educational content, because everybody digests content in a different way. You know, there's the visuals, there's the videos, there's people that like to read. You know, everybody takes that information a lot of different ways, and from the college kids, they're always an interesting dynamic to work with because a lot of them, for the first time, it's learning an option, and some of them have actually opened accounts and have begun to trade with us, and when they start learning options, you know, as you were asking Tony about the investment experience, we're finding a lot of the millennials are actually starting to trade with us at options versus equities because they have limited capital. They don't have $15,000 laying around to go buy 100 shares of Apple, but they can, you know, put on a vertical call spread, say in Apple, and have defined risk, which is what we teach a lot in all of our different education that we put out. So it's always interesting to see that from our side.
I kind of wanted to ask that's really incredibly interesting that people would start there for that reason, because you have an underinvested, I mean, certainly at StockTwits, and we have, I think, 60 or 70,000 connected accounts where people can trade through, including your platform, but the account sizes are so small. I mean, people are starting with $1,000. Like, how do you get started? I mean, now we have 4x leverage ETFs, so that's great. But I think sort of maybe same question for Kristi. I mean, what do the demographics of your audience look like? I mean, and where are they starting from? Are they coming right to options?
Yeah. So actually, with everything that we put out, we you know, it's easier when they actually understand the market and about buying a stock. But we talk about buying a stock first because everything that we do is probability based. It's all statistics, it's all numbers. So we say if you're buying a stock, you have a 50-50 chance of making money. It could go up, it could go down. And when we start to show them the probabilities, they do tend to start with options then. And Mary's exactly right. It's because you don't need as much capital, and it helps them preserve their capital. So that's definitely...
that has to be a big industry shift.
It is. Oh, yeah, it is. I mean, when we talk about this, you know, initially, 6 years ago when we started tastytrade, there was pushback, and before you know it, you got people jumping on board. We actually brought in Dylan Radigan. I don't know how many of you know who Dylan Radigan is, but a couple years ago, we brought him in and put him head-to-head with Tom Sosnoff. And you guys know Tom Sosnoff, beret, long hair, my co-CEO. He went head-to-head with Dylan, who is, you know, a financial media figurehead from a number of years ago. And it was putting them head-to-head on sort of the beliefs of what we teach versus, you know, it was called truth or skepticism. And we really wanted him to sort of punch holes in what we teach. Eventually, we converted him because he realized and understood all the details around probabilities and just the statistics around it. So it's a really powerful message, but we're not out there touting it. You know, it works.
The way options, I think, have historically been presented make it complicated. Like, you use the phrase wall of numbers. I mean, it's one of the most fun things in the world to show an option chain to somebody who doesn't see it coming, and, you know, it's bananas, right? It's difficult, but it doesn't have to be. I mean, are there education strategies at TDA, Mary, that you guys are specifically endorsing or working with, or that are working around making it easier, more than you said?
Yeah, I mean, as Kristi said, there's probability-based, but one of the most simple strategies that I think you can teach, especially to a new options trader, something as simple as like a covered call, right? You're purchasing a stock, you're selling a call against it, you're bringing in income. For some of the people with less capital, especially the college-age students, where you're teaching them how you're purchasing a call, or things simple as selling as a put, all the different ways and strategies how, if you want to be bullish on something, all the different ways you can do it using spreads and being risk defined, and all the, for lack of a better word, but all the options that you can do with options. Those all the different ones that we do. And it's interesting at the beginning you said people are scared of millennials. I think a lot of people, when they think of millennials, will think of, for me, I always think of the college kids. I forget that I'm one. And they say it's from, 1980 to 2000. So when you're looking at that 20-year generation gap, you have someone that's 37, that's probably purchasing a home, that's married, that has kids, to a kid that right now is 17 graduating high school. So when you're looking at that millennial demographic and you're showing one different strategy, a strategy you're going to be showing somebody that's on the older end at 37 is not something you're going to be teaching someone at a younger end in a college demographic.
Yeah, there have been some articles recently about this. Hey, we're not all the same, let's break it up into pieces.
Can I mention one other thing, too? Because when we were talking about millennials, what do they start with? I didn't mention this before, but they actually start with iron condors. Because fully, no matter which way the stock is going to move, they're essentially covered.
Great.
So yeah, and so that's what we've found with our millennial audience.
I think this idea of repackaging strategies and using technology and automation to maybe, I can't think of the exact parallel, but there are plenty of things that are incredibly complicated, like under the surface, that we've, as a society, managed to package in a way that is both safe but also effective. And this is probably the next step on the list, and the people on the panel and everyone else out there are going to be doing that. What about, and this can be a challenge. For us as a social platform, 50% of our traffic is mobile. It's mobile first, mobile only, a little bit more complicated when you're transacting, but obviously Robinhood and many others have sort of taken that on, at least on the equity side. What are you guys doing to address the fact that such a huge percentage of this generation's activity with respect to financial services and anything is mobile? Mary, why don't you start?
Actually, I'm going to disagree with that one. In the last March quarter, actually 45% of our trades in the millennial generation went through a mobile device versus our retail clients, where it was 22%. So the millennial generation, granted, we're on our phones all the time, and I promise we're just not Snapchat. You don't know if I'm swinging futures trades up here. You don't know what I'm doing on my phone.
Spoiler, she is.
But yeah, so we're seeing double the amount of the trades going through on mobile. What's interesting to me is on both generations, the older and the millennials, 75% on iOS and Android. But ours is keeping that simple technology, those apps, making it intuitive, making those wall of numbers and being able to trade those complex option strategies. You can do it with just a couple clicks on the mobile device, and that's where we keep putting a lot of our development, because that's where we have the millennial-based trading.
Tony?
Yeah, from my perspective, there are millions of mobile apps in the app store. So that alone it's certainly crucial in terms of capturing the eyeballs of millennials. But when it comes to actually getting them to trade, a complicated product like options, it really requires, like you said, the simplification of.
It's a matter of space also.
Exactly. So to get those, like Snapchat, right? It's by no means the only picture sharing app in the App Store, but why is it so successful? It's because of the user experience, not just because of mobile. Mobile is the first step, but you really have to push the envelope when it comes to user experience in order to capture mobile.
So start mobile to engage, but say, listen, this may not be the best place to do everything you want to do.
Right. So look at Robinhood, right? Because you mentioned Betterment in the beginning of the panel. Robinhood, it's a mobile-only app. It's by no means a new product, because it's just a brokerage account, just like any other brokerage account out there. But what they've simplified is the user experience, and they've changed the business model. Because to talk about millennials' distrust in financial services after 2008, that really has gone towards shifting business models as well, not just the user experience and mobile, because we no longer trust the concept of commissions and high fees. Those have been taught to us as bad. So that's why you have firms like Betterment and Robinhood that have really changed not the product but the business model.
They've repackaged an experience in a thumb swipey way, which is great.
Exactly.
I love demoing the connection between like our product and Robinhood. If you grew up calling a broker, the ability to swipe, click, buy is incredible. How about you?
Yeah, well, same. So I won't repeat what you guys have said, but we totally believe in that same thing. And I'll actually talk about it a little bit from a media consumption standpoint, because that's another aspect of our business. And when you look at the media consumption, even over the last 5 years, and I'll speak to YouTube because YouTube's stats are pretty powerful. When you look at YouTube's numbers, like I'll call it 6 years ago, so basically when we started tastytrade, they had 24 hours of video being uploaded every minute. And then 5 years later, it was 400 hours of video uploaded every minute. And now it's closer to 500. But if you look at YouTube stats as well, their numbers of viewing on mobile devices has surpassed, it's over 50%. And that's something that we clearly pay attention to. And again, knowing that millennials are not only on YouTube and on mobile, everything that we're doing on the brokerage side as well is moving in that direction. So you mentioned Robinhood. I think they've done a fabulous job on their experience and reduce the number of clicks to get anything done. We usually do things pretty fast at tastytrade and tastyworks, but we spent 6 months on the account opening process because we know before when we owned a brokerage firm, there were so many hurdles, and it's difficult when you have options and you have all of the all the extra documents. So we spent a lot of time to make sure that we simplified that process for tastyworks.
So we had a good audience question that I want to get to. Actually, it was the one prior to the one that's up here, but I think it said, there it is. This is going to be fun. Investing is primarily a driver to build assets over a long term. How do you keep a millennial focused on a long-term strategy? So I guess I'll turn that to one of the millennials. Tony, I think you're up.
Well, I think one way to do it is what Betterment has done, which is the set and forget, right? Which is something that my generation sort of captures and understands, because if you can show how my money can grow over the long term, which there's lots of research, that optimal asset allocation across these low fee ETFs will grow my money faster than putting my money with a financial advisor or perhaps even self-directed. Those are terms that we understand, and by making that process as easy as possible as opening an account on my phone and being able to auto transfer money into that account every single month, where I don't have to remember or even think about doing it, that's one way to get millennials thinking about longer term investment.
Right. I mean, this idea of DIY comes into everything, because I think that this generation is used to learning, is incredibly good at learning, learns really fast, and then implements tools and cycles of automation of those tools to make it work. So I think there's a perception that millennials are instant gratification or this or that, but I agree. I think that it's a false comparison. What about you, Mary?
I would say that, they do, right? I feel like a lot of what I was preached to, or thinking about retirement long term, I really do think that millennials do, do think long term and do keep them interested. I think of myself, right? Like I always have a long-term portfolio, and I'm already skipping to the next question.
Yeah, I was thinking about that one too. Let's just say what it is.
Yeah.
The next question says, are millennials traders or investors?
Yeah, so I'm mixing the two of them together. And I say, are millennials traders or investors? Like, can't we be both?
Yeah, of course.
Right? Because I think of myself as being both, right? I have a long-term portfolio where I have my dividend, yielding stocks, certain ones that I'm going to get it. But then as far as trading, like who doesn't love earnings season? season. It's Christmas a couple of times a year, 4 times a year. But as far as millennials, what we found at TD Ameritrade, because recently we've been looking at a lot of the research into data of what they're doing, and just looking at the last quarter, they are investors. They are looking into long-term plays. Last quarter, they were holding Facebook, Amazon, Apple as their top holdings, which similarly were the same as our overall client base. So the way that they're investing is the same as our overall client base. So they are trading the same way. The one difference that they had last year is they invested in Snapchat in the last quarter a little bit more than the regular database or client database, but they are investors. I don't want to give the impression that they're not and they're just trading options.
No, we saw the same, and I think this comes back again. Like Robinhood proved a couple of things. It proved that if you remove all friction, you create an easy-to-use experience and you make it free, that people will try. And I think they come for the trading and they stay for the investing. That's what we see, at least on StockTwits. What about you, Kristi? What do you see?
Yeah, I mean, and looking at what we do, we're all about sort of engaging the do-it-yourself. We call it do-it-yourself investor, but they're traders, because with trading options, I mean, it's weekly, it's monthlies. This is more about engagement and teaching someone to maneuver the market. So we don't focus on that. We don't focus on the long term necessarily, but it comes hand in hand, just because they are very focused on learning and doing their research. And so we're cognizant of that, but our content really focuses on the engaged investor with derivatives.
And I think obviously that's our responsibility as an industry to make sure that as this giant generation enters into something that's new, that everybody's making good decisions. So this is a good question too. How do you educate a young generation on the risks of naked premium selling when there hasn't been real volatility in a decade? Anyone want that one?
I'll take it. So we actually see quite a bit of, I guess, this in my particular case I think is actually quite encouraging. We're actually seeing a lot of people looking at selling naked puts as an alternative to acquiring stock. And this is partially due to education. So video is I think plays a very big role in helping people better understand how selling puts can potentially actually be less risk than buying the stock outright. And from our perspective, we do a lot of webinars on income generation. So we cover calls, short puts, and that's actually how we've been able to capture or allow people to better understand selling naked options. And I will say, to the prior point, from our data, not only are millennials looking at trading and longer term investing, we're seeing all demographics kind of have a long-term portfolio and at the same time take speculative positions on shorter term, like you said, earnings season or whatever other reasons that they have a directional view on an underlying stock. We're seeing all types of traders take these types of strategies in their portfolios.
I think one of the things that I know TD Ameritrade we preach, and I know you guys do, Kristi, as well, but you stay small, stay risk-defined, especially when you're starting out, especially with options. You just want to small and risk-defined.
I totally agree. It's one of our pillars. We say trade small, trade often, because it's like anything. If you want to get good at it, you need to practice, and it really helps you understand and maneuver the markets and understand where that risk is. But we do videos covering the risks around selling anything naked. And again, we have so much content. We cover sort of all different scenarios, but also managing that. I think that's probably one of the keys. You can teach someone all you want about trading options, but if you don't actually teach them about what to do when it goes wrong, or even what to do when it goes right, then you're sort of doing them a disservice. So
yeah. So I just realized everyone up here has a giant component of our business that is about educating and bringing people down a path to become better investors. So just real quick, what percentage of your organization's time, everyone's organization's time, do you spend worrying about how to get people through a flow to learn what to do versus serving your power users? Or some other another way to express it.
Well, so I'll go first. So we actually, it's even. In the beginning, we sort of jumped in and focused on the heavier users. But over time, we realized that to connect that bridge, we needed to provide some of the basics. So our time is pretty well split. I have to mention something too. When we launched Doe a number of years ago, we've now rebranded Doe, our front-end trading platform, to be Tastyworks with our brokerage firm. But the one thing, our intention was to go capture millennials and have an approachable platform. And the beauty of it was we actually were capturing some of those baby boomers that were just sort of too afraid to ask. And so I think from that standpoint, that was sort of a huge learning piece for us. It also attracted people like me who have a day job and need to simplify and just need to make a quick trade. So I think that from that standpoint, we've found that we really need to sort of spread our time covering the beginners all the way to the advanced.
Yeah, I mean, we're getting younger and younger. We spend more and more and more of our time on the beginners. What about you, Tony?
Yeah, so very similar to her experience. You know, from when we simplified the user experience of options trading, we weren't necessarily trying to go after just the millennial market, but what we realized is that by doing so, we were able to capture a much wider audience than we originally thought. You know, our intentions, like we said when we first started, was options for the rest of us. We were able to capture a lot of financial advisors that were already selling cover calls for their clients. We just made it easier for them to better understand and better quickly service them. And to your point about, you know, the first step is helping people understand options and get them into options, but how do you help them manage those positions? That's actually a huge, I guess you could say, time-consuming factor of trading options is managing those positions. So that's one of the, where automation really comes into play, and that's a lot of where my time goes into today is building out tools that help monitor those positions for investors and financial advisors so that they can better understand what are the best practices to managing cover calls, short puts, and all types of different option strategies that they're currently in.
I would say across all the demographics, TD, whether you're beginner, if you're intermediate or advanced, it's spread pretty evenly. One of the things that I think that I selfishly at TD that I really like that we do is we do a lot of client events where we invite clients from all spectrums, and it's an opportunity for our clients to actually network with each other, where we have people from our educational team, we have people from our trader team, just kind of all encompassing, but bringing everybody together in that room just to see them kind of engage and network. But I would say it's pretty across the even.
Yeah. So what about trust? I mean, everyone up here spends a lot of time working with millennials, know how they trust or don't trust, but a lot of this generation watched their parents' wealth disappear, don't trust financial institutions in the same way that generations prior did. Some of us have newer organizations, but I'm sure there are a lot of people in the audience who don't. What are some strategies, some actionable strategies, if you could give advice to people? How do they instill the kind of trust that will allow this younger generation to not fire their broker, which is the phrase that you hear all the time? I mean, nobody wants to get fired. So what do you do?
Transparency, transparency, transparency. I mean, really, truly being clear and open and no hidden fees and no hidden anything, being really upfront and really open about everything you're sort of laying on the table for them. Because remember, they're going to seek the information. They're going to look for it. They're going to research. But if you make it too hard for them and you and you sort of throw something at them later, you've shut them out, basically.
And then
so, yeah.
It's amplified in social.
It's amplified in social media. And remember what I also said about a trust. They trust their peers. And there's 40% of affluent millennials, particularly, that actually seek financial content in their social media realm. And so just paying attention to that, you're not transparent about something. And that is absolutely going to be amplified.
They'll figure it out.
Yeah.
And then you're in trouble. Yeah. What about you, Tony?
Well, in terms of establishing trust, there's no quick and easy way to get trust. But some of the things that Kristi spoke about in the beginning is generating content as opposed to selling to this audience is generating content, allowing them to see what you're doing to progress their financial needs. And a lot of the things that we spoke about here in terms of social media. Social media is a great way to capture or to reach this audience, because as Mary said, we don't really read our emails, and email marketing isn't a great way to get our attention. But through social media and by generating good content, that's how you build trust with this generation.
Can I add one quick thing too? Is video, anything visual in social media, so an infographic or a video, people in general, but millennials in particular, trust that more. They just do. If you write something in text, they're going to actually trust the video or the infographic more.
Making a distinction between trust and easier to digest.
But there is trust behind it, because generally if they're seeing, and particularly if there's a person, there's trust because they feel like there's a little bit more of that interaction. So there's a research study out there that has really sort of dived into that. So.
Going off of what Kristi and Tony both said, I would say reliability. Knowing that there's a person there from a support standpoint, I would say in addition to reliability is the technology, right? All this trading is done on technology, and if you do not have reliable technology that they can't trust and rely on every day to go ahead and get those trades and, their trades or their investments off, you're in trouble, right? Because the first thing is, okay, this app doesn't work. All I have to do is go to a different app store. I can transfer money right over, and it's very simple to switch brokers nowadays. So
that's an interesting point. So is that basically saying that the technology infrastructure and its reliability is kind of the proxy for the old big, thick-walled concrete bank of the past, or you're not going that far? I think it's interesting.
I would say reliable technology.
Yeah, reliable technology I think is a good one too. But there's a stat out there, 82% of individuals do their banking in some regard, online.
Yeah.
So, and that's, only continuing to increase, so.
I got a red light. We're getting booted. One last thing anyone wants to say. If you have advice for everybody, we're going to all be dealing with this ginormous generation of people who do things a lot differently. What's one thing you'd say to everyone that we should do?
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.